In class today, I said that I would go over exercise 1710 in a video, and that's what this is about. So in 1710, it says, assume the same information as 17.9 and that Steffi Graf Inc. reports net income in 2020 of 120,000 and in 2021 of 140,000. Total gains, including any realized holding gain or loss, equal $40,000 in 2021. In A, it says prepare a statement of comprehensive income for 2020, starting with net income. So, first thing we're going to do is we're going to call this A, and we'll put a header in there because if it says a financial statement, we need to make sure we do it right. And we'll do that here. Steffi Graf Inc. And then we're going to say that this is the statement of comprehensive income. And we'll say for the year ended December 31, 2020. And we can put an underline there. If that works. And we're going to start out with net income. What the statement of comprehensive income does is it reconciles net income from the income statement. And it tells us right up here that net income for 2020 is 120,000. And then we're going to adjust it for things that are in AOCI adjustments, other comprehensive income adjustment, accumulated other comprehensive income adjustments. And that includes what we did in 17.9. Remember 17.9 was over here, and we had, and this was in 2020, because this was all for December 31st of 2020. And the date of this was 12/31/20. That was this journal entry right here. And we have an unrealized gain that goes to other comprehensive income. It's not included in net income. So we're going to take that over here, add unrealized gain or unrealized holding gain on available for sale debt investments. And that is going to be this 1100. It's going to come from right here, 1100. And that is going to give us a total comprehensive income number, which is equal to the 120,000 plus the 1100. This is going to be with a comma, and we'll get rid of this. And then here, we'll put a double underline underneath this. And there is our answer to question A. Prepare a statement of comprehensive income for 2020, starting with net income. Now what happens in 2021? In 2021, we're going to do the same thing. And in fact, I'm going to go up here and copy this header right down here. I'm going to change the date because it's for the year ended December 31, 2021. And we're going to start out with net income. And net income now is from $140,000. And then it says we had holding gains. I'm going to type in here add. I won't even put add in here. I'm just going to write holding gain on available for sale debt investment. And that is going to be 40,000. Now, if you go back over here to exercise 17.9, in exercise 17.9, we had this transaction here where we sold debt investments at a loss and we realized this loss, and this was January 20 of 2021. I'm going to put 1/20 of 21. That was the date that this occurred. And that means that this $2,400 over here is included in getting down to net income, because net income is the bottom line on the income statement. It was subtracted in getting down there to net income, and yet it had previously been included as a holding gain in the prior year, right? So that $2,400 was included. As a loss, because it was a $2,400 loss in the prior year. And so what we're going to do is we're going to reclassify loss included in net income. And that means that we are going to take it out of the holding gain, or the holding, it was really a holding loss, and that's going to be added to this gain because it was a holding loss of $2,400. And you don't even know that for sure that it was included, but you do need to make this adjustment as if it was included in the prior year's holding loss, which actually was a holding gain net of all of the other securities. And so what this is going to be a line here, and we'll extend this over as the 40,000 holding gain plus the $2,400 reclassification of a loss that was included, that was actually realized. Okay, so we realized that loss, and we assume that it was included in the prior year adjustment for unrealized holding loss in the prior year. It's a little confusing, but you just need to do it this way. And it says that we're going to have comprehensive income is going to be the sum of the 140,000 plus the 42,400, and we'll put a double underline just like that. And that is our comprehensive income, which is a broader measure of income. And again, the key thing is that this $2,400 loss that was included in net income is assumed to have been included in comprehensive income the prior year. And because it was included in comprehensive income in the prior year, we need to reclassify it out of comprehensive income. So there was a loss that was included up here, and we're going to reclassify it by adding it back up down in the next year when we sell it. Okay, so then there's this other thing and that we have to do, because it says prepare a statement of comprehensive income, but we also have this reconciliation of accumulated other comprehensive income. And usually this is in the statement of stockholders' equity. And in the statement of stockholders' equity, we show the beginning balance in the common stock and the additional paid-in capital. And these are each shown as column headers: common stock, additional paid-in capital, retained earnings. And it says, so you would have something like this. You would have your common stock, additional paid-in capital, you would have retained earnings, and then we'd have this AOCI, and you'd want to write this all out because this is, I'm just sort of sketching this out, and you show your beginning balance, and then you make adjustments to this. Oh, well, for common stock, we had an addition because we sold some common stock. You would have, for every stockholders' equity account, you would reconcile the beginning balance to the ending balance, and that includes AOCI. AOCI is a stockholders' equity account. And this is going to be a partial statement of stockholders' equity for accumulated only for accumulated other comprehensive, so many big words, income. Okay, we can, oh, yeah. You can wrap that, I guess, something like this. Let's try that. Wrap the text. Something like that. Partial statement. So we're going to get rid of these. We're going to get rid of this. We're going to get rid of this. And we're just going to have the beginning balance. We're only doing accumulated in accumulated other comprehensive income. And the beginning balance for that was 1,100, because that's what we had from the prior year. We had recognized this unrealized holding gain in OCI of 1,100. So I'm going to go back over here, and let's assume that that's all there was. Put a $ in there because it's your balance sheet and a financial statement. And we're going to add current period other comprehensive income. And that's going to be the 40,000. And then we're going to have reclassification, and that's reclassification from other comprehensive income to income. And let's say reclassification of loss. Previously recognized in other comprehensive income, now recognized. Now recognized in income. And you say, oh, well, that's all spread out. We can fix that. I'm going to wrap this and merge and center. And then I'm going to go left justify. And I'm going to put that up here like this. And that's going to be the $2,400 loss that we had already recognized in OCI. Now we're also recognizing it in the income statement. And that's a double count. So we have to add back this 2,400, And that gets us down to the ending balance. I'll put it right here, which is the sum of these three. Didn't work. I'll just add them up. Plus, come on, Jeff. Plus this number, 43,500 ending balance, and that is ending balance of accumulated other comprehensive income. And there you have the solution. And this last part goes a little bit beyond the call of what was asked for up here, because it says prepare a statement of comprehensive income starting with net income. Well, that's really just this part. And then the reconciliation of beginning to end, that's in the stockholders' equity statement. And this was the beginning balance. We're going to recognize the increase in value of the available for sale securities here. And then we're going to make an adjustment because we have recognized this $2,400 as in the prior year AOCI and in this year's income statement. And that double counted that loss. We need to take one of those losses and take it out by adding it here. And that takes it completely out of other comprehensive income by adding it back. And there you have exercise 1710. Enjoy.